the first thing we want to do is emergency fund. Emergency fund is a part of the risk management, basically. Emergency fund, we want to make sure you got some money set aside for the unexpected. And so investment, of course, if you're starting and you don't have a lot of money, you're not going to do some speculative investment, right? You're not going to go with crypto. I see a lot of people going with crypto when they're just starting. It's super highly, you want to avoid high risk investment. Some people say, hey, I want to do it myself. I don't need a financial advisor. I know a lot of people don't like financial advisors. They think they can do it themselves. I mean, engineers, I know you're an engineer. They like to do it themselves. Some of them are super smart. They know how to invest. They know how to buy shares. They know how to do this. Don't get
Mhm.
me wrong. But some people they want to do themselves, and sometimes they do the wrong thing. Yes.
Welcome to another episode of OTG Podcast. I'm your host, Gracien Onya, and today we are diving into a topic that affects everyone: financial security, wealth building, and protecting your future. Whether you are an immigrant, international student, or a US citizen, you will want to pay attention because our guest today is an expert in in financial planning, retirement strategies, and investment growth. So we will cover all things that how to invest wisely, avoid costly mistakes, plan for retirement, and protect yourself from unexpected financial disasters. Let's jump right in. Joining me today is a financial expert specializing in wealth management, business risk planning, and retirement strategies. Hey, David, welcome to the show.
Thank you.
Can you tell us a little bit more about yourself?
Thanks for having me. It's an honor. My name is David Lino. I'm a Congolese person. I grew up in France, and I've been living in the U.S. for about 10 years. Spent about 7 years in Atlanta. Then I went to Los Angeles, California, and just moved back to Atlanta last year. So as far as what I do, I focus on financial planning. The firm I work with, the service we provide integrates risk management and wealth management. So risk management is all the insurance product. We're talking about life insurance. We're talking about disability insurance, long-term care, even annuities. On the other side, we have wealth management, which is all the investment product. Whether you want to, prepare for retirement, you want to grow your money, optimize and grow your money, even estate planning. So
Mhm.
what we do, we integrate both risk management and the wealth management, and that allows us to provide a comprehensive financial planning firm. We have all kind of people, whether you are retirement, want to make sure you get money every single month so you can live your best life at retirement. Whether you're close to retirement, so we make sure we prepare you for your retirement. Whether you dip into your career, so we just want to make sure we kind of maneuver everything. Whether you have a family, you want to send your kid to school, to college, you want to buy a new home, you want to get married, you want to have a just budget, minimize taxes. It's pretty comprehensive what we offer. So we do it all. Yes.
Yeah, that's pretty good. So you said you grew up in France, right?
Yes.
And then came here from France. So what made you choose this career path?
So my background is tech sales. I used to play basketball first, so I was a professional basketball player. And then when I moved to the U.S., basketball didn't really work. And in France, I went to school in business school, and I was a tech sales account executive. When I moved there, I'd start doing the same thing. I worked for Microsoft. I worked for other tech companies. I did it for about 10 years. And then I started my own business in tech as well. I launched my own platform in tech. Startups, 80% of startups fail the first 5 years, and mine, failed as well. Then when I was in LA, I had this opportunity to do finance, and there's something I didn't know about. I
Uh-huh.
think, just like a lot of us, I have no idea about finance. They approached me, and I first even rejected the offer. Then they came back. I was just like, let me see, what these guys want. And then I really liked it. That's why I took my licensing and the study and do all that stuff like that, get my credentials. And I started working in LA and I transferred last year. In Atlanta, I started keep doing the same thing because we have offices all over the country. I just transferred
Okay.
from California to Georgia, doing the same thing within the same company.
So you said you're working for Northwestern Mutual?
So I don't specifically work for Northwestern Mutual.
Uh-huh.
Northwestern Mutual is our broker dealer.
Okay.
Yes.
And then how long you
I'm
been?
under the umbrella. I'm
Oh,
sorry, I
you
didn't
under
mean
the
to cut you.
umbrella.
We are under
Okay.
the umbrella of Northwestern Mutual. We use their
Oh, okay.
infrastructure to manage our clients' money and provide all the product.
Oh, okay. Let's talk about some financial risk most people overlook. What are the biggest financial mistakes people make when planning for the future?
Gosh, that's a lot. Let me just name a few of them.
Yeah.
I would say the lack of financial planning, no clear vision about what you really want to do and your goals and what's the strategy to reach those goals. No emergency fund. A lot of people don't have emergency, unfortunately, and no emergency fund for the unexpected. Life is gonna life, right? You cannot prevent life from lifing. And
Yeah.
it can be, medical bill, the engine light come on, your kids, anything can happen. If you don't
Mm-hmm.
have emergency fund, it's not gonna look good for you. No investing or starting investing late. We see a lot there on our community. People they don't invest or they start investing too late because when they're young, they think they have, the rest of their life. That's a big mistake because you want to start as early as possible, as young as possible, because and you can benefit from the compounding. Also, what other thing I can say? Failing to plan for retirement. A lot of younger, let's say some of the younger clients, they think they have the rest of their life. They think they got time to plan for retirement. They start thinking about retirement when they're 40, 45, and sometimes 50, or sometimes close to 60. Actually, when you want to start planning it, like when you're in your 20s, so you can be very comfortable and have a choice when you want to retire, not to be obligated to work past 65 years old.
Yeah.
Neglecting insurance needs, that's a huge mistake because people think, there's a lot of misconception about insurance, specifically life insurance. It's not even just life insurance. We talk about even the health insurance. How many people don't have life insurance if they don't go to work? And another mistake is they only have insurance with work, not outside. Life insurance, disability, you can be sick at any time. Something you cannot plan, you cannot prevent from being sick or injured. You cannot pay your bills. You cannot send your kid to college. You cannot prepare for retirement if there's no money coming in. So disability is a good way to disability pretty much is anything that's going to prevent you from going to work and disability cover your income. So, I mean, I can go on and on, but I think those are some of the biggest mistakes people do.
Yeah, talking about insurance, recently those insurance companies had a lot of trouble because, as some people will say, insurance companies, those are one of the companies that steal money from people in US. Right. So as an example, recently from that wildfire that happened in LA.
Mhm.
So I've also read, a lot of companies cancel policies of people at a time. So for such thing, I think that's one of the reasons why people don't really trust those companies. So is there something that you make people really believe in those? Because as of myself, I have some doubts. For I do have insurances, right? I got auto and health and some other policies too, but I do have some doubt because it's mainly on their interest. It doesn't really work for you, the person. That's what I think.
But one thing also, you get what you pay for, right? If you're looking for the cheapest insurance, you're looking for the smaller company, when you're gonna file a claim, then you have trouble, right? So you wanna go with the AAA ranked companies. There's not a lot of them. You can see the ranking, and the company, how big the company, how strong the company is. And yeah, bigger company they pay claims. Smaller company, of course, they're not gonna pay claims. So you just gotta be. I don't do property and casualty. I don't do health insurance, home insurance. I do life insurance. And the
Okay.
Northwestern Mutual, for instance, broker dealer has never missed dividend payment, for instance, or claim for 157 years. Another example, that tragic tragedy happened in 911. Had Northwestern Mutual had about, I think, 160 policy holder in those buildings, and within 24 hours they pay $140 million worth of claim. without no death certificate. So my point is, it depends the company you go with. If you go with the cheapest one, you got to be ready to get the cheapest service. If
Yeah.
you pay a little bit more, then most of the time they pay claims.
You're right. You're right. But just an example before we jump into another question. For my previous car that I had, I was using Geico. I don't think Geico is the cheapest one. Geico is pretty
Yep.
decent, right? But they kept on bumping my insurance, the price, my monthly price, without me having no like speeding ticket, no ticket at all, or no accident on my record. But when I called them to ask them, they would say, "Oh, just they didn't really have any reasons, why they but they kept on bumping my insurance, every premiums that I was getting. So
Well, I can't really talk about Geico because I don't work for them, and I don't do auto and
yeah,
home neither. So
yeah,
I mean I do have a car insurance myself, and
yeah.
yeah, but yes.
It's all good. But why is financial planning even more critical for immigrant or international student?
First of all, navigating a new is very, very crucial. Just think about it. You just moved from a whole another country,
Yeah.
whole another financial system. Like, we're looking at credit score. For instance, I know even though I was raised in France, I was born in Congo. So I moved
Mm-hmm.
there from France. In France, we don't have credit score, right? They don't
Oh, you
check
don't?
no, there's no credit score over there. So
Okay.
simple stuff like the banking system is similar, but if you're from Congo and you're in the US, the banking system is totally different, right?
Uh-huh.
Taxation. You want to learn about taxes. Like in Congo, for instance, how many people you know pay taxes in Congo? If they're not like a regulated company, stuff like that. Here, you have to pay
Yeah.
taxes. You don't need to be a business to pay taxes. And in regulation, when it comes to investment, right? There's a lot of regulation. So you need to learn navigating those new financial system, just the system, that country. Handling education cost is something also, right? Because some student international or immigrants, I mean international student, they come here maybe on scholarship. Some of them don't come on scholarship.
Mm-hmm.
So and education, as you know, in the U.S. is not something cheap. Also, achieving your financial goals. Think about after you finish school, or if you're an immigrant, you start working, you get opportunity in the U.S. maybe to buy a home. How you gonna plan for that? Right. Paying taxes once again. As you know, when you're African, when you live in the US or even in Europe, your family in Africa think a billionaire. They always asking for money. So you got to
Yeah.
plan for that too, budgeting so you can send money to family members in Africa. You want to start a business maybe. A lot of Africans, I keep saying Africans, but a lot of immigrants, we talk about, the Indian community, Asian community, they have small businesses. So all the regulations about the financial system in the US here. So planning all that stuff help you, you know, have a tailored plan, helps prioritize goals and create a step-by-step a roadmap for success.
For someone who never planned their finances before, what would the first step, what's the first step they should take?
So when I have a client, I sit down for the first time, I listen to their story and their goals and what they want to accomplish, and then I start creating a financial plan. The first thing we want to do is emergency fund. Emergency fund is a part of the risk management, basically. Emergency fund, we want to make sure you got some money set aside for the unexpected. It's going to be some
How
rainy day. I'm sorry, go ahead.
do you have like a number for it?
Minimum three, ideally 6 months of your monthly expenses.
Okay.
So if your monthly expenses is about $5,000, including rent or mortgage, car insurance, groceries, and if you have kids or stuff like that, that's $5,000. Minimum you need to have 15,000 set aside on an account which is very liquid. I mean,
Mm.
ideally hide your savings account because you don't want to leave it on a regular savings account because you're not making no money. 6 months that's about $30,000. So it just depends on your
Expenses.
your expenses. Yeah, you want to have that planning, also insurance, protecting, having an emergency fund, then protecting your family in the event something happened, right? One thing is
Yeah.
guaranteed is death, but we don't know when it's going to happen. So if that happens, so you don't want to be a burden for your family. Some people, they have mortgages, especially Africans, for instance. I know there's talk about life insurance is something taboo in the African community, especially Congolese community, because I'm Congolese. But
Yeah.
and then what happened when someone passed in the community? what they do, they call everybody, every member of the community, asking people to come together for money, but they don't know people, they got their own issue as well too. So
Yeah.
versus you can have a cheap life insurance and something happen to you, your family don't have to to beg other people to get money, and they can pay off the debt, the mortgage, and all the stuff like that. So I would say emergency fund insurance, disability insurance is super critical because if you get sick or injured, you're not able to pay your rent or your bills or anything. So you want to make sure you protect your ability to make money, your income.
Mm-hmm.
That's what disability does. And then start investing. Of course, if you're starting and you don't have a lot of money, you're not gonna do some speculative investment, right? You're not gonna go with crypto. I see a lot of people going with crypto when they're just starting. It's super highly, you want to avoid high risk investment. So you want something small, like such as you can use investment retirement investment investing. I'm sorry, employer sponsored accounts such as the 401k, 403b, TSP. 403b that's for school or nonprofit. TSP for the army. 401k that's everybody know that. Um, yeah, small stuff like that, and even sometimes the Roth IRA for individuals, just to put a little bit of money every single month to be disciplined.
Okay.
Yeah.
So what's the percentage for the APR for the Roth IRA?
That's the market.
Oh,
It
just
depends.
based on the market?
Yeah, it depends what you if you go with the. It depends where high is it invested. A lot of there's a lot of mistakes people. The biggest one of the mistakes people do is they think they put the money they do themselves. For instance, they put the
Yeah.
money in a Roth IRA. Nothing happened because yeah, it's just like you put money in the checking account. You got to reinvest the money inside, and then you need to allocate the money. You need some money allocation, diversify the money. So yeah.
Oh, okay. So as you say, like many people don't think about disability income, right? So why is this such a crucial part of financial security?
Just think about it. Today, you go to work, you are able to pay your expenses at home, your mortgage, your car, just to have fun on the weekends. And you might have goals and projects you're doing, ambitions, dreams you're doing because you're working. If tomorrow, for whatever happened, you become disabled, I mean, when I'm saying disabled, I'm not even talking about, something crazy. I'm talking about you can become sick or injured, anything that's going to prevent you from going to work, and you cannot go to work for a year. Think about it. Worst case scenario, 5 years old. I don't know how many years. How are you gonna do now to keep up with your rent, your bills, your expenses, and your goals? You cannot do it. The disability will protect your income. So if you have disability with once again a good insurance company, you file a claim, and they're gonna cover your expenses. If you have 100%, they cover 100% of your expenses, your 100% of your income. I'm sorry, until you get back to work. Whether that's 1 year, 2 years, 3, 5 years, it depends on your benefit. So you're not impacted. The common thing we see with people is they are sick or injured or actually disabled, but they compromise their health just to go back to work because they have no other choice. Either gonna go to work, they get evicted, they're gonna be behind in their bills. So they just compromise their health to go back to work. If you have a disability insurance, you don't have to compromise your health. You can take time and recover because you get your money monthly.
Yeah, I believe some companies provide that, right? Or is
Yeah,
it something that you have to use a third party for?
no, some company do provide, but they don't provide. Most of the time, they don't provide 100%. So,
Uh-huh.
uh, generally, what we see is about 60%. And keep in mind, 60% of your income is also 60% before taxes. So after tax, that's half of your money you get. So if today you're making, let's just say $10,000 a month,
Uh-huh.
and your expenses are about $7,000 a month, and you become disabled, well, you're only gonna make $5,000 from your company. So what you want to do, you want to get an external insurance company that they can cover the rest of the extra, 50%. So you got 100% your salary when you're away from work.
And then what is it based on to be eligible for those insurances? That does it like, you have to be healthy or do you have to be in type of way physically for you to be eligible for those?
Yeah, insurance, all the insurance product, not all the insurance. I'm talking about life and disability insurance product is based on two things, primarily on two things: your age and your health. If you're unhealthy for whatever reason, probably gonna get declined, especially if you go to like those large companies such as Northwestern Mutual, Mutual Life, Mass Mutual, New York Life. Chances are you'll be declined if you're super unhealthy.
Mhm.
But if you healthy, they're gonna approve you, or if you're not specifically super healthy, but you have a little bit of health issue, they can approve you, but your like is gonna be just a little bit more expensive because
Okay.
you are more at risk. And as far as how much they're gonna pay you, it just depends on your salary, how much you're making. If you are an employee, the requirement is most of the time your pay stub, if you're W-2 pay stub. And if you are self-employed, they ask at least 2 years of your tax return to cover you.
So it's pretty much similar to like auto insurance because, if you have so many accident or so many ticket, you might get approved or you may get approved but with a higher premium, price and stuff.
You're a bigger risk. So
Yeah.
they're taking a risk insuring you, so they're gonna charge you more.
So what happens if someone suddenly can work due to injury or illness? How can they stay financially stable?
Disability, that's a good thing. If you cannot go because that replace your income, that protect your income. I'm not sure if I understand the question.
But what I meant by is like, what if they didn't have the disability insurance before that happened? Can they
Well,
apply for it
no.
or they won't be able to?
Chances are they will be
They'll be
a
denied.
decline. They will be denied. Yes. So once again, some of the mistakes, people think they have time to do stuff.
Mhm.
That kind of make me think, do you know, now I'm going to ask you a little question. I know you're asking the question, but do you know when is the best time to get insurance, life insurance or disability insurance, for instance?
Disability. Okay, let me start with life insurance. Life insurance, I do think as soon as you can, if you are in your 20s, the sooner you start, the better because it will help you, save. And then you can do some other stuff with that too, right? You can start investment. Oh, I think the other day we talked, you told me you are able to like maybe withdraw that money tax free at some point.
Yeah, that's different. But yeah. It depends on the policy you get for life insurance, right? If
Right.
you get a whole life or VUL or universal life, yeah, you can
Mm.
borrow it against the money. But the best time to get an insurance, I'm sorry, go ahead.
Yeah, but for the disability, it just depends on how okay, that's just my POV, right? If you think you are a healthy guy, you go to the gym, you watch what you eat, you just don't be eating anything. For me, you don't have to take it when you are in your 20s, right? But as soon as you hit your 30s, anything can happen by then, right? So that's when you should start thinking of, getting a disability either from work or, from a third party or something like that. But yeah.
Yeah, I would say the best answer is when you don't need it.
Okay.
Both for both. When you don't need it, that's the best time to get it. You know what? Because when you don't need it, you're super healthy and you're probably young. Yeah. And when you don't need it, most of the time it's cheaper too. So you don't
Oh
need to
yeah.
wait until you need it. Because when you need it, chances are it's gonna be super expensive or you won't
Mhm.
be able to get it. So that's why I always tell people, you know what's the best time to get life insurance? Oh, when you're young, when you're 20s, when you're 30s, or you don't need it. Just as simple as that. Because people think I'm single, I'm not married, I'm young, I have time. When that time comes, when you have been married and have kids, you might not be as healthy. You're not gonna be as young as you are now, but you might not be as healthy as you are now. And now you're at risk. So
But
you want to have it and let it sit on the side, like a term, for instance, let it sit on the side. When you need it, it's already there. And it's cheaper because you locked your rate when you was younger.
But the thing also is that I'll just give you an example right there, right? So let's say you're in your 20s, you're 20 years old, and then the gap between 20 and 30 is like 10 years old, right?
Mhm.
Because I do think if you have your disability, that's kind of money you will never get it back if you don't use it. Can you?
No.
Exactly. It's like auto. You may have auto insurance for 10 years. You don't have no accident. You never report anything. Kind of money that you're not really throwing away, but you're not really using it, right?
Right.
So that's why I said for life insurance, you might be able to borrow against your money, depending on the premium you get. But for disability, since you're not really using it, and then you're a healthy person, although it's good, the sooner the better you get it. But at the same time, the way I view it is just like, from 20 to 30 years old, I'll be paying for something that I'm not using. Maybe that money I could have used it for something else.
So I would respectfully disagree with this. I'm gonna tell you, I'm gonna tell you why. So you said You from 20 to 30, you're super healthy. You work out, you go to the gym every day. You eat healthy, and you take care of your body, right? So you
Right.
have. What if you're driving and you get into a car accident?
It's a what if though.
You cannot control that. You'll
Right.
be happy. You'll be happy to have that. Just like a car. I never been. I touch on wood. Never been in a car accident.
Hmm.
And I've been paying car insurance for the whole time. But my car was stolen once. One of my car was stolen a few years ago. Guess what? I was happy that I had car insurance at that time. So my point is, I'm saying, yeah, when you're young, you think you don't need it because you think you're gonna be super healthy the whole time. You can be super healthy. You can have a car accident. You can have a stroke. You got some young people get stroke. Matter of fact, do you know what's the number one disability in the US?
Now what is it?
Give me a guess.
I forgot.
It's okay. I can tell you what it is. It's mental health.
Kind of that. Yeah, yeah.
Yeah,
Is that a
mental health.
disability though?
Yeah, you can be stressed out, burnt out, and you just can take you go see your doctor and say, Gracien, you need to stay away from work. And
Mm.
you healthy, right? You eat well, but you go to work, you're stressed out. And in the US, the number one disability is like mental health. People
Yeah.
are burnt out. It's not being a handicap. It's not. It's literally is the mental health. People are stressed out. People are burnt
Mhm.
out because that's the kind of life we live in. Right. And we can go if you, of course, you gotta go see a doctor. You first gotta get a letter from the doctor. You cannot just say, "Hey, I'm burnt out, and I need to stay away from work for 2 years." But my point is, you don't need to be physically disabled to have disability. That's one of the misconceptions. People think like you need to be physically disabled to get the disability. No, disability can be mental health. It can be so many stuff. And you trust me, you'll be happy and even though people are burned out, guess what? They still go to work. They still be on traffic. They still hate what they're doing because they
Mhm.
have no other choice. If they don't go to work, guess what happened? There's no money. If there's no money, they cannot provide for their family. They cannot pay the expenses. They cannot do all that stuff like that. So disability
So,
actually is one of the most important one you ever have.
so you're saying that you can use your disability money, when you going to depression, right? Is that what you're
So
saying?
if you go into depression,
Yeah.
let's say you are covered, you have the disability, and you go to deep depression, not even deep depression, you go to depression, and you
Yeah.
go see your doctor, and the doctor diagnose you, and they say, hey, this is severe, and you need to stay away from work for 2 years or for 8 months. What you gonna do during those 8 months or 2 years? If you don't have the disability, what you gonna do? You're gonna go to work, even though your mind is going crazy. You're still
Yeah.
gonna go to work. If you have the disability now, guess what? You're gonna stay home and recover. You don't have to compromise your health. So disability is extremely important. That's why I always have people educate yourself at least because you might
Mm.
just have an idea what it is. Oh, I don't need it. And when time's come, you'll be happy that you had it.
Yeah, you're right. You're definitely right on that. So, a lot of people assume life insurance is just for families. Can individuals benefit from it too?
Yeah. So let's just get a step back here and define what is life insurance, right? Or give the type of life, what is life insurance and what kind of life insurance is out there. So there's two main type of life insurance. Obviously, the main benefit of the life insurance, regardless the type, is death benefit, which is
Mhm.
mean if you're no longer with us, your family get the death benefit. They can help you. They can help with the final expenses. They can help with the funeral, and they can help cover all the debt and leave money to your family to support them when you're not to replace your income, right?
Mhm.
But life insurance, there are two types of life insurance. I'm sorry. The first one is the term, and the second one is permanent. Term is what I just described. The benefit you get is death benefit. Term is similar to renting a home. You went to home, as long as you pay your rent every single month, you have access to your apartment or your home, right? When your
Mhm.
lease is over, I mean, they're not gonna refund you your money because you used it. Term is like the same. You can get a term at some point it's gonna expire. It depends how long you have it. If you get a 10 years, 20 years, 40 years, 80 years, at the end of that term, if you're not dead, it's expired. But if you die within that term, your family get the death benefit.
Mhm.
On the other side, we have permanent, just like the name says, permanent is permanent, never expire. In
Yeah.
addition to having those death benefits, just like the term, you also have living benefit. And the living benefit comprises two elements. The a dividend. Not all company pays dividend, right? I said earlier, Northwestern Mutual Fund has never missed a dividend for more than 160 years, 157 years. I'm sorry. So and in the past 157 years, we've been through a lot. We talk about the wars, we talk about Grand Recession, we talk about all kind of stuff. But regardless, they still paid it. I mean, they were still profitable because in order for a company to pay a dividend, they have to be profitable. That's how strong they are, right? So you get the dividends, but you also get accumulated cash value. That's what you was referring before. And accumulated cash value, you accumulate money. So if you pay, I don't know, $1,000 a month, for instance, a piece of
Yeah.
that $1,000 going to insurance, another piece going to accumulate cash value. Now you become your own bank. You're saving money, and
Yeah.
you get a return on the money. And the compound interest, your money keep growing, keep growing, keep growing, right? And later on, you can borrow against the money. And when you borrow that money, which was I told you last time, you don't pay tax on it because there's two things the government tax: income and capital gain. Income is anything you make from working, and capital gain is when you do an investment, you have your investment. Let's say you buy $100 share or $100 of a company that's $100, and later on the $100 turn into $300. The extra $200 that's capital gain, and you're gonna pay tax on that. But there's one thing the government don't tax. The government doesn't tax is loans. So you having that money in your cash value, you can borrow against it. So you loaning yourself, and
Uh-huh.
because you're taking money from your right pocket and putting it in your left pocket. But because it's at the end it's still a loan, you don't pay tax on it. And permanent, I don't want to get super deep into it. And permanent is different category of permanent as well. Whole life and the universal. Whole
Yeah.
life is pretty much guaranteed because the money you're not investing, but the money is within the insurance company general account. So they guarantee your money. But the
Uh-huh.
return is smaller, right?
Yeah.
And it take a long time to grow, which is for some people that's good because they use it for their retirement, right? I'm gonna use it later for my retirement, or I'm gonna buy a house later on. It's like a saving with the compound interest. And the other side, you also have a universal. One of my favorite universal is VUL, variable
Uh-huh.
universal life. This one, the money grow faster because it's attached to the market. Investing now, you are investing in the separate account. So the majority of your money you putting, if you put $1,000, maybe $300 going to insurance and $700 going to investment.
Uh-huh.
But as every investment product, that's the market go up and down. So you take more risk, but the return with the long term, the return is gonna be greater. So that's pretty much the different type of insurance. You got the term and you got a permanent. Yeah. Does that answer that question? And what was the question again?
Yeah. Actually, you did answer the question, and my follow-up question was gonna be which one is better between those two insurances? Between
As a,
those two terms. Yeah.
it depends on your situation once again. When I do planning, when we do financial planning, it's all about listening our customer, our clients' personal situation. Everything is tailored on your specific situation and your goals and needs and your family situation, your financial situation, everything. So a family person who has kids, who has children, not specifically have a lot of money, but they're concerned about leaving a legacy or protecting the kids in the event something happened to them. I go with term because term
Uh-huh.
is much cheaper than permanent. But someone who's younger, they can even get the term as well. But someone younger who's more, the goal is more to save money or invest money, get the return on their compound interest. I go with permanent. And the permanent, you want to start as young as possible because I said earlier with the compound interest, you're gonna make
Uh-huh.
more money. And as the younger you are, the cheaper it's gonna be. The older you get, the more expensive it's gonna be.
Okay, let's talk about investment. So, what are some beginner-friendly investment strategies that don't require a lot of money?
Well, you can just like I said, employer sponsor. It can be an option. Saving a little bit of money out of your check every single period. You just go to your retirement to your 401k. You can 401k, 403b or stuff like that. You can do that retirement account. You can do. I'm sorry, go ahead.
I say, can we even save with this new economy? Everything's getting expensive, and then people are not getting paid enough.
We always can say it's all about discipline, right? I was having a conversation with my director, who's also my mentor. and he was telling me how he's a black person too, right? But he was telling me how black people we do things out of your emotion. Right? We buy of your emotion. Like we don't think sometimes. It's not out of effects. It's out of emotion. So we can have an impulsive buy. You go to the store, you didn't plan on buying anything, and you go to the store, you see the new T-shirt and then the new shoes, and you buy it. That's what we do. So to answer your question, yes, you can if you're disciplined, right? Yes, you can if you change your behavior, right? Because even though everything is going more expensive, actually that's the best time to do it because you know things are expensive, so you need to have some money on the side. You need to save
Uh-huh.
money because things keep going up, and that's the inflation. The best way to fight inflation, what is it? To invest because you get more money. If you let your money sit on your savings account, the inflation gonna outpace your money because inflation is going up 5%, 3%, 2%, whatever percent is going. If your money just stay there, now your money is worthless. I mean, worth less money now, zero zero. So versus if you're investing, if your inflation is 5% or 3% and your return is 7, 8%, so your money is more than the inflation. So you want to invest, even though you don't have a lot of money, put something on the side. Don't because think about it. Every weekend, people always spend money. Even during the weekdays, Starbucks, eating outside, go have a drink with friends, buying this new stuff. I'm not even talking about women doing hair, nails, stuff like that. That's expensive. There's
Uh-huh.
hundreds every single, not month, week. If you put those hundreds in like in a savings account or your Roth IRA, which the money grow tax free, years from now, you're spending the money anyway. Why don't you just maybe the half of you spending, put that on a Roth IRA with a good return, you might have way more money. So you can spend even though you don't have a lot of money, you still can save and invest.
For the people who are newly coming from back home, from the Congo or from Africa or any
Mhm.
country, they cannot speak the language. So somehow, some way, and then they have to work in the warehouse because of the language barrier, or some type of job where they don't really speak the language, which means most of the time the pay is it's usually limited, to a certain level because of the language barrier. At the same time, with with this economy, everything's getting expensive. Apartment are expensive, food are expensive, and they cannot save. So, what advice would you give them?
It's pretty much the same thing that we've been discussing, just on a lower scale. Thinking you cannot do it is limiting yourself. This is
Okay.
this is America. This is the land of opportunity. I know a lot of people say a lot of bad thing about the U.S., but one thing we cannot deny this and undeniable is this is the land of opportunity. I didn't grow up here. I'm from another country, and I'm from Europe. I'm not even from. I didn't grow up in Africa, so I have some opportunity people didn't have. Like in France, I have some opportunity that people don't have in France, Africa. And moving from like always a you know like good I mean how do you call it like a big country to another big
Mm-hmm.
country, it's undeniable. America, you really have this is really the land of opportunity, right?
Yeah.
So people limiting, just like I say, is everything is just a belief, right? They're limiting themselves because they say I cannot do this. The system is against us. I don't make enough money. I don't speak the language. I don't. And now you are limiting yourself. There's so many opportunities over here. I know some
Mm-hmm.
people, look at the Indians, for instance. Some of them don't barely speak English. Some of them don't
Right.
even speak English, but they own businesses and they make a lot of money. Asians. Have you been to some Asian restaurant, whether there's Chinese or Japanese or whatever? So the server barely speak English, but guess what? They have a business here.
Right.
Right. So there's a limitation. If you want to put yourself in a warehouse, don't say that's the only option I have. No, you can start with the warehouse, make a
Right.
little bit of money, build discipline. Once again, change your behavior, stop impulsive spending, save your money, reinvest your money, grow the money, and then reinvest on your business.
Right.
Right. So that's why sometimes I don't want to hear that when our people are just when I say our people, I'm talking about black people in general, not just people from Congo, all Africa, or
Mm-hmm.
even black Americans. We always have excuses. The system is against us. We cannot do this because I'm black, this and that. There's so many black people are successful here. So why not
Yeah.
you? There's so many Africans are successful here. Why not you? I barely speak English myself. I still have an accent. English is not my birth language. But look where I am now.
Yeah. I think we'll never lose that accent, though.
I don't want to.
I, don't- yeah. I don't want. I don't want either. I want to keep my accent. That's. Yeah. So what are the safest ways to grow wealth without taking huge risk?
Employee sponsor. This is really safe. You put your money in there. No money, the money grow. They kind of know what they're doing. You want to avoid high risk investments such as crypto or speculative investment. You want to maybe buy some index fund, ETF. These are low cost. They're pretty cheap. Roth IRA, things in there, high yield savings account. You can have that. Also CDs, the bank CDs. There's so many stuff you can put, a little bit of money. Life insurance can be a good one too, the
Mm-hmm.
money is safe. Based on your budget, if you want to put $200 a month in there, you can. If you want to put $1,000, 2,000, $10,000, you can. You just navigate based on your budget.
So earlier you said when you put your money in the Roth IRA, it's kind of like a checking account, right? You have to invest, but how do you invest after putting your money in your Roth IRA?
I mean, you choose where you want to put your money. You want to put in the S&P 500, you want to put it on the ETF, you want to put it on Vanguard. You just like if you come with us, we're gonna create we're gonna create your Roth IRA, and then we're gonna reinvest the money. Sometimes rebalancing the money. If one it does the allocation. If one which you got one investment is not performing well, we can remove it, replace it with another one. That's rebalancing. Constantly reviewing it and and investing the money.
That's pretty good to know because some people will just, leave the money in there and then think that, it's going to get some
Yeah.
interest. Does it get some interest though if you just leave it there in the
If you,
Roth IRA?
just think about it. You
Okay.
leave your money and it's not investing on nothing.
Hmm.
What return are you gonna get if there's nothing to perform? You're not gonna get anything on it,
Yeah.
right? That's why some people say, "Hey, I want to do it myself. I don't need a financial advisor." I know a lot of people don't like financial advisors. They think they can do it themselves. I mean, engineers. I know you're an engineer. They like to do it themselves. Some of them are super smart. They know how to invest. They know how to buy shares. They know how to do this. Don't get
Hmm.
me wrong. But some people they want to do themselves, and sometimes they do the wrong thing. Guess what? Some people know they need to invest. They need to buy shares. They need to buy stocks, whatever they want to buy, and they ended up buying the wrong thing or not doing enough diversification on it. So if you buy just one stock of Apple or whatever company you want to buy and the company perform bad, you lose money. Versus if it's diversified, that's why I mentioned earlier, ETF, these are well diversified and this is a low cost. Sometimes you got a little bit of money, you can put mutual funds and that kind of automatically diversify your portfolio.
And how much should someone save for retirement if they're in their 20s, 30s, or 40s?
It
Let
depends.
me let,
It depends on
okay.
your
Uh-huh.
your income, right? One of the rule I do to
Uh-huh.
almost all my clients is the rule of 80/20. 80% of your money going towards your life, your lifestyle spending and having fun and paying your dues and 80%. 20% needs to go towards saving and investing. So if you're making, let's make it simple, right? If you're making 100,000 a year, you gotta leave off 80,000, including your taxes, everything. Paying your taxes, 80,000. 20,000 of that, I'm talking about gross. I'm not talking about 20,000 needs to be going to saving and investing.
Hmm.
So if you're young and you only make it 60 grand, you do the math. If you're young, you only make 50 grand, 40 grand, 80%, 20%. This is something simple. Then there's all different philosophy, different advisor they have. I think this one is to me is a good one.
That's very good. So let's talk about some education planning. With college getting so expensive nowadays, what are the best ways to save money for?
Well, if you are a parent, you want to save for your kid. There's two different. So I want to make sure I
All right.
understand the question. If you're a parent, you want for the kid, or you want to do yourself. So if you're a parent, I can answer to both, right?
Yeah.
If you are a parent, and you want to save for your kids, there's so many vehicles out there. The 529, everybody know about that. That also does got some tax advantage. I mean, the money you contribute to is tax deductible. Uh, Coverdale is similar to a 529. You just have some limits. You cannot contribute as much money. I think the limit is $1,000. And UTMA and UGMA, that also for the kids as well too. But that also help you, that one is taxable. It's not deductible. It grow tax free, for instance. That's the good thing about it. And another benefit, you can use it on however you want it.
Mm-hmm.
529 and cover there, that's for education. If you just for anything that education, you get penalty. But UTMA is non-tax deductible and grow tax free, and you can use it for whatever you want to do it. So now, if you yourself, if you want to save for college, you can save money on a Roth IRA. The Roth IRA, the good thing because you're gonna people when I say that, people tell me, "Oh, I thought Roth IRA is a retirement account, and if you touch it before 59 and a half, you get penalty." Technically, yes, but if you qualify, and you have it for 5 years, you don't pay tax on it, right? Up to $10,000. So there's some yeah if you use it for if you have it for 5 years, you don't pay tax on it, and if you borrow up to $10,000, you don't pay tax on it neither. And yeah, and the other thing, the high savings accounts, because you're saving, but you get a little bit of money, a little bit of return. So those are some options as well. So
Just to clarify for the Roth IRA, so you're saying, let's say if you put in $10,000, right? So you are eligible to withdraw the $10,000, but you cannot just withdraw the interest that will compound out of it before the 5 years, or I mean after the 5 years, right?
no, even after the 5 year, you can.
You can.
So before the 5 years, you can get the money, the
That you put
contribution,
in.
not the earning,
Exactly.
not the earning. But up to $10,000, there's even the earning. Up to $10,000, even the earning, you can get that as well too. No, let me make sure I got this right. So for the Roth IRA, you can withdraw the contribution,
Yeah.
uh, and you don't pay tax on it, but not the earning. Earning, that's anything, the capital gain, right? But after 5 years, you can take money up to $10,000, even the earning, without whether the contribution or the earning, with no penalty.
What are some smart ways to reduce taxes legally?
Yeah, there's so many ways. We're looking at retirement accounts. You can have some tax deductible retirement account, education account, just like I mentioned with the 529. You can minimize your taxes. SEP IRA, if you're an entrepreneur, a self-employed, SEP IRA or different ones like a cash balance for cash balance, SEP IRA, you can use that as well. Roth IRA is not deductible, but it grow tax free, and later on you can put the money tax free. So that's great for future tax planning. Maybe
Uh-huh.
not you pay tax now, but later on you don't pay tax. So that's another great thing. So the HSA is a
Health saving account.
health savings account. This one has a triple benefit. Not only grow tax free, you can take the money tax free as well too, and you can use it tax free for some qualified medical
Health.
expenses, health medical
Yeah.
expenses. So it's tax deductible.
Yeah.
Whatever you save that is tax deductible. So that's a great thing. Tax loss harvesting. This one is it's not that complicated. Tax loss harvesting. Basically, you can offset your capital gain with the loss. So basically, you
Uh-huh.
sell whatever you lost, and you offset it with the capital gain, right?
Yeah.
Charitable donation. So if you have a charity you like, it can be tax deductible as well.
Uh-huh.
For people that make good money, I would say municipal bonds, because municipal bonds, you don't pay tax, you don't pay federal tax, you don't pay federal tax, and if you're a resident of that state or that municipality, you don't pay tax neither. So let's just say you buy municipal bond of the city of Atlanta. If you're resident of the city of Atlanta, or if you buy one from the state of Georgia, and if you're resident of the state of Georgia, not only you don't pay federal tax, but you don't pay tax state tax neither. So it's tax free. And then another states people don't know. I mean, these are U.S. territories. Regardless if you're a resident or not, is like the U.S. Virgin Island. I think it's Samoa or something. I forgot. But those are area Puerto Rico. So if you buy municipal bonds for those territories, regardless you resident or not, you still don't pay tax on it. So this can be some good option as well.
Yeah.
Real estate, and especially in a city like Atlanta, there's like a really real estate focused city. You can write off the depreciation.
What's one financial mistake you wish everyone could stop making?
Say I'll start tomorrow.
So procrastinating.
Yeah, I'll do it later. What time is right? I'll start later on. I have time. I got stuff to do first, and next thing you know, it's too late because life there's no such thing as the perfect time. There's not never gonna be the perfect time.
Yeah.
Right. Keep waiting. I need to finish this first. This should be your priority. Your financial life should be your priority because we live in a society, whether you like it or not, with no money, there's not much you can do. Right.
Yeah.
And look at us, everybody complaining about how we are treated, stuff like you think wealthy people complain about what we're complaining about? No, because they have their money. And their money keep working for them. They don't have to
Exactly.
worry about money. So we should start doing the same thing. So stop saying, I'm gonna do this later on. I need to finish this first. I gotta start somewhere. Even though you start small, at least start.
And then that's very important too, because, I do believe that a lot of people need to learn how to make the money work for them instead of them working for the money.
Yeah. Just think about it. Everybody know they need to save or invest money. But people sometimes get overwhelmed where to start, how to do it, you know, and sometimes they don't trust financial advisor or they have misconception thinking about financial advisor is going to be super expensive. You have to start, educate yourself. This live in an age where we have a lot of information, sometimes bad information, but we have so much information out there on YouTube and on social media. You got to be careful. Or if you can't afford it, speak to a professional, seek advice from a financial advisor. That will help you a lot. Because just like I said earlier, I had to take those licenses. These are hours and hours and months and years of studying to get those licenses. So
So you're saying for someone who's watching us today that want to get the finances in order, so they should start by seeking a financial advisor?
of course, of course,
Okay.
because it's just hard to do yourself.
Oh,
Why do
yeah.
you think those smart people, like we talk about doctors, attorneys, lawyers, engineers, like yourself, for instance, they're smart people. They can do it themselves. Why do you
Uh-huh.
think they seek a professional? Because they know they can do better than themselves, and sometimes they don't have time. Versus you working, taking care of your kids, and do all. Do you have time to be fully focused on your finance? I do that for a living, so every day
Yeah,
that's what I think about.
that's what you do. Yeah. And where can people find more resources or connect with you for guidance?
Well, I mean, they can reach out to me uh on anything. I can provide my phone numbers 323-659-0789, 323-659-0789, or social media. I'm not really active. I'm gonna try to be a little bit more active on social media. Instagram, LS underscore the one THEONE, or LinkedIn, David Lino with the S at the end. David Lino space S. I'm on LinkedIn. So yeah, they can reach out to me. Happy to help.
I'll make sure to have all your information though, all your social media, your phone number, to link to the video when it will be posted so that people can have access to you as well.
Mhm.
Et je voulais aussi dire ça juste en français. So
Bien sûr.
pour joindre David, je vais avoir toutes ces informations, que ce soit sur son plateforme Instagram. Si tu as TikTok, je peux ajouter ça, que ce soit LinkedIn. Et ton website aussi, le lien que tu m'avais envoyé, je vais mettre
Oui,
ça et
bien
ton
sûr.
numéro de téléphone comme ça. Ceux-là qui auront besoin de tes conseils sur la finance pourront te contacter à partir de cela. Et moi, à la communauté, tu n'as pas de quoi dire à la communauté qui sera en train de te voir, de regarder
Ouais,
ici.
la communauté,
Pour
j'ai
ceux-là qui
déjà,
ne te connaissent pas.
oui, pour la communauté, sachez que vous avez un frère qui est ici à Atlanta, qui est knowledgeable, qui a beaucoup de connaissances, qui aide beaucoup les autres communautés, mais qui est là pour vous, hein, parce que nous vivons ici, nous faisons beaucoup d'erreurs par manque de
Mhm,
savoir. Et c'est même pas de notre faute, c'est simplement que nous avons pas nous pensons ne pas avoir les ressources, mais nous avons ces ressources-là. Et moi, j'en suis un. Donc,
mhm.
et je suis prêt à aider, à faire pas des sacrifices, mais vraiment faire des concessions pour aider notre communauté, hein. J'espère d'ailleurs que cette vidéo, tu peux la poster dans le groupe chat dans le WhatsApp de la communauté, comme ça, certaines personnes peuvent voir ça.
Oui, oui, je vais poster dans. Je crois que c'est Coco Matel. Je vais poster. Thank you for having this time of a good and very informational topic that we had to go through. I hope that it helps the people out there who really need, because I do believe a lot of people need this.
Yeah.
So I hope it gets to sur les bons oreilles et puis ça va aider les gens qui ont besoin d'aide.
Thank you for having me. Merci de m'avoir invité. C'était un plaisir.